General Electric is loosening the purse strings and getting back into the M&A game. Our next guest once worked for GE, and now he covers the company as an analyst. Nick Heymann of Sterne Agee Leach has been among the biggest skeptics on GE and called the stock a sell until March of this year. He upgraded to neutral, which is precisely where his rating stands today. And Nick is, in fact, right here. Nick, let's get the conversation going with just your feelings about the stock. I said you'd been skeptical. We talked to you for many, many months about the problems with GE's balance sheet, and you were concerned that GE wasn't going to turn around. You changed your approach when investors began to change their approach. They seem a bit more confident. Are you more confident?
I'm more constructive, that's for sure. This is not a quick turn, but it is one that's certainly headed the right way. We're starting to take and return capital to investors with a dividend. The big dividend increase this year was designed to help return cost effectively the growing cash pile that the company has accumulated. And now we're starting to see them put it back to work from an acquisition standpoint.
Well, a lot of people, let's put it this way. There are some differences of opinion as to what GE should be doing with its cash. Should it be spending the money on acquisitions? Should it be using it for additional restructuring? Should it be returning yet more cash to shareholders in the form of a dividend? The dividend is way below where it used to be. Where would you like to see it used?
I think the dividend will come back up. I think that's the number one means to be able to enhance the value of the shares. Earnings are going to be on a gradual recovery. They're putting a lot of money back into higher R&D. The benefits from that accrue 2013 and beyond. The acquisitions today are the first effort to redeploy the capital coming out of NBC and they're coming out of operations to be able to expand the emerging market footprint of the company. Ex-NBC, that's 26, 27%. They want to move that well into the 30-35% range.
Nick, let's bring up a chart that we made. It shows GE's acquisition history over the past 10 years, and you'll be able to see here the chart. The blue bar chart is the value of deals that GE has done. As you can see, it really dropped off in 2008, 2009. The yellow line is the number of deals. That, too, dropped way off after peaking in 2007. What do you think Jeff Immelt is going to do to that chart? Is the yellow line going to go way back up? Is the blue bar going to go way back up to the historical highs?
Well, they're talking about $30 billion worth of deals over the next 2 or 3 years. The idea, again, is to really focus it on the infrastructure, the energy, and the technology infrastructure side. They're building out energy right now in oil and gas with the Dresser deal yesterday. And I think clearly you'll see a gradual improvement. The key is the price. Yesterday's EBITDA multiple is about 8 times. That's a good price. We don't want to see mid-teens, and just, disregarding, if you will, the effectiveness of the capital redeployment.
Is this an opportunity? Are acquisitions an opportunity for Jeff Immelt to reassert himself at this company, effectively a second chance after, some people would say kind of blowing it going into the credit crisis?
Well, capital allocation, could be argued to be not one of their strongest suits in the last decade. This time around, I think we're going slow. I think we're going to go carefully, opportunistically, and I think we're going to go, very incrementally. We're moving capital out on the international side of GE Money, shrinking overall the footprint of capital. Yesterday, this week, pick up $1.6 billion of private label credit card receivables from Citi. We have the highest rates today on private label credit cards since 2001. So I think they're doing the right things.
We have about 40 seconds left. Do you believe Jeff Immelt wants to persuade shareholders that this can be a growth company?
I think he wants to rebuild the foundation for being able to help demonstrate he can create value. And right now, it's a gradual, incremental improvement on the industrial side. We've had a significant recovery on the financial side. And I think near term, the best way to convince people he's looking out for their interest is dividend yield.
Quick question. The stock has a long way to go before it gets back to the pre-crisis highs. How much time do investors give Immelt before they run out of patience with about 20 to go?
Certainly the sooner the better. We want to see a 2 in front of it. Our target, looks for that to be happening in the next 6 months.
It's a $19 target. Nick, always great to have you here. Nick Heymann of Sterne Agee Leach on GE, folks.